Hold on to your hats, folks. Wall Street just took a nosedive and it's making everyone nervous. The Dow Jones Industrial Average, that big fancy index everyone talks about, plunged a heart-stopping 900 points. That's a huge drop, and it's got investors sweating bullets. So, what the heck happened? Well, a few things conspired to send the market into a tailspin. First, we got some lousy news about the US economy. The jobs report came out and it was weaker than expected. That means businesses aren't hiring as many people as we'd hoped, which raises fears of a recession. Yikes! Then, there's the Bank of Japan. They threw everyone a curveball by raising interest rates. That sent shockwaves through the global markets and added to the uncertainty. Investors hate uncertainty. And if that wasn't enough, the CBOE Volatility Index, which measures how scared investors are, shot up like a rocket. It's at its highest level since the start of the pandemic. That tells you everything you need to know about the current state of the market. Fear is running rampant. Bitcoin, the king of crypto, is having a rough week. It's been a bloodbath in the crypto world, with Bitcoin plummeting more than 14%. It even dipped below $50,000 at one point, its lowest level in months. Ouch! This crypto crash is partly due to the overall market correction. When investors get nervous, they tend to sell riskier assets like Bitcoin. And let's be honest, Bitcoin is about as risky as it gets. But there's more to it than that. Bitcoin has been under fire lately, with some big-shot investors calling it out as a speculative bubble. They're saying it's only a matter of time before it bursts. That kind of talk can really spook investors and drive the price down.
The tech sector, once the darling of Wall Street, is getting hammered. The Magnificent Seven, those high-flying tech giants like Apple, Microsoft, and Nvidia, have all taken a beating. Nvidia, in particular, is feeling the pain, with its stock down over 13%. What's going on with Nvidia? Well, word on the street is that there are delays with their new AI chips. These chips are a big deal because they power all those cool AI applications everyone's talking about. If Nvidia can't deliver the chips on time, it could hurt their bottom line. Plus, Nvidia relies heavily on those big tech companies like Microsoft and Google to buy their chips. If those companies slow down their spending on data centers, Nvidia is in trouble. And when Nvidia sneezes, the rest of the tech sector catches a cold.
Section 4, Netflix, streaming or screaming. Netflix, the streaming giant, is feeling the heat. Its stock has taken a hit, falling about 10% in recent weeks. Investors are worried about slowing subscriber growth and increased competition from other streaming services. But wait, there's hope. Some analysts believe this dip in Netflix's stock price is a buying opportunity. They argue that Netflix has a few tricks up its sleeve, like raising subscription prices and cracking down on password sharing. Plus, Netflix has a killer lineup of shows coming out soon, including new seasons of Stranger Things and Squid Game. Those shows are guaranteed to be huge hits and attract millions of viewers. And let's not forget about Netflix's push into live sports. If they can snag some popular sports rights, it could be a game changer.
It's not just Wall Street that's feeling the pain. Stock markets around the world are getting slammed. Japan's Nikkei 225 index, one of the biggest in Asia, suffered its worst one-day drop ever, plunging over 12%.
What's causing this global meltdown? It's a perfect storm of bad news. The US Federal Reserve is raising interest rates, which is putting pressure on global economies. China, the world's second-largest economy, is slowing down. And the war in Ukraine is causing uncertainty and disrupting global trade. All of this is making investors nervous, and they're selling off their stocks. When everyone is selling, prices go down, and that's what we're seeing in markets worldwide. It's a classic case of contagion, where fear spreads from one market to another.
So, what does the future hold for the stock market? That's the million-dollar question, and unfortunately I don't have a crystal ball. But I can tell you this, the market is driven by fear and greed. Right now, fear is winning. Investors are worried about a recession, inflation, and geopolitical uncertainty. Until those fears subside, the market is likely to remain volatile. We could see more big swings up and down as investors try to make sense of the ever-changing economic landscape.
My advice? Don't panic, stay calm, and don't make any rash decisions. If you're a long-term investor, this market dip could be a buying opportunity. But be selective and focus on companies with strong fundamentals and a proven track record of success. And remember, The market always bounces back eventually. It's just a matter of when, not if. So buckle up, hold on tight, and get ready for a wild ride.